Okay, so my ladies and gentlemen, let's make progress. Now, please, I want you to take your time as we go through this. No pressure. If you get confused with something I say, instantly prompt me to clarify it before we move on. Now, let's do it this way. The basis of this double entry is for us to be able to give proper account for an asset we buy, how we use it, and how we finally dispose it of. So let me do something here. If I want to use the life of an asset as that of human beings, then you realize that a human being is born, right? The person goes through life. So the person lives or live, if I should put it. And then finally the person dies. So since I'm using a singular, the English professors can assist me if I make any error with the grammar or something. So a baby is born, the baby lives, and then finally dies. This is the same as when you are dealing with an asset. You buy an asset, or better still, you acquire an asset. The asset will live. Now, through the life of the asset, what we do is we depreciate the asset every year. Okay, like the baby will live from year to year. The baby will be 1 year, 2 year, 3 year, 4 year, 5, until he or she dies, maybe 90 years old. In this modern time, people are even dying at the age of, So we are going to depreciate the asset, and then finally, when it dies, we say the asset has been disposed of. Disposed. So I want you to pay attention to these 3 stages of the life of an asset. We buy the asset, we depreciate it, and we dispose it of. Or sometimes we can sell it off, so we can sell the asset off. But it's the same as disposal or disposing the asset off. So if an accountant of a company, it is expected that when you buy the asset, you have to record it in the books by doing debits and credits. Every year when you are depreciating it, now note that the depreciation is done year by year. It's like the baby always celebrating birthday. So every year you celebrate birthday. For the life of the asset, every year we depreciate. Okay. And then when the asset is disposed, you have to record it as well. So we want to look at the double entries for when you buy an asset, when you are depreciating it year by year, and when you sell it off. Hence the essence of what we are coming to look at. So the first one is when you acquire the asset. What entries do you pass when you buy an asset? And please, I want to believe we all remember in our Form 1 lessons, the double entry. When you purchase an asset, you debit the asset, and then you credit your cash or bank if you paid cash or check. If you didn't pay, then you credit the creditor. I want to believe we all remember this. Good. Thank you. Now, when that asset comes into the business and you record it, every year you have to look at the depreciation. That's the second stage I was talking about. So at the end of the year, you charge depreciation. How do you charge it? You use the methods we have just looked at. Is it straight line? Is it reducing balance? So you use that method to calculate the depreciation. Whatever amount you get, this is the double entry you have to pass. You would debit your profit and loss account. and you credit provision for depreciation account. Why are we doing this? Or why are we debiting and crediting this account? Now, let me make it a bit, real. You know that your profit has a credit balance, right? Profit has a credit balance. So if you are depreciating an asset, to some extent, it is seen as an expenditure, okay? Because the depreciation itself means that the asset's value is falling. And if an asset's value is falling, that is an expense or a loss to the business, okay? So if you are setting a loss against your profit, you have to debit the profit and loss account simply because your profit has a credit balance. So if you are deducting anything from it, or if you are losing something as a business, it has to go against your profit. So you debit the profit and loss account, and the corresponding credit entry goes into the provision for depreciation account. I want you to remember this like you remember your birthday. Okay. Then the last bit is when you dispose the asset.
Sir,
Yes, dear.
can you please go over that one again, please?
Okay. The
The
depreciation.
depreciation.
Okay. So let me go to the next page so that it will make sense. Do we all agree that profit has a credit balance? Do we agree to that? Profit has a credit balance. And then loss, of course, loss has a debit balance according to the principle, the double entry principle. If I were to open my profit and loss account, let me do that quickly. If this is my profit and loss account, then I'm saying that my profit will be on the credit side. So maybe if I have any balance, let's say 20,000, it will be on the credit side. Let me put the title, profit and loss. Okay, so if this is my profit and loss account, then any balance on the credit side shows a profit, because profit has a credit balance. So if you are charging depreciation, what it means is that, you see, depreciation is a loss. Okay, if your assets value is falling, if you have a building and then the value is deteriorating, it means that it's a loss, right? So if you are setting it against your profit, then you need to debit your profit and loss account with the provision for depreciation, because in a way that thing is going to reduce your profit. If your assets value is reducing, it means your profit is also going to reduce, right? So let's say the provision for depreciation is 8,000 after doing your calculation with whatever method. So note that depreciation in a way reduces profit. Okay. So if it is reducing profit, then we'll debit the profit and loss account, and then the corresponding entry will go into provision for depreciation account. Let me do that down here so that you can get the picture clearer. So if this is my provision for depreciation account, so the corresponding entry will be in this account, but on the credit side where I see profit and loss, how much? 8,000. That is why the double entry is when you charge depreciation, debit profit and loss, and credit provision for depreciation account. So is that okay?
Yes, please.
Thank you. But you see, what makes it a bit as in confusing in the instance is that you have to do this every year through the life of the asset. So if you bought the asset in the year 2001, it means that 2001, you calculate the depreciation, debit profit and loss, credit provision for depreciation. You move to the next year, 2002, you do same 2003 until the year that the asset is sold off the business. Okay. But again, please get the principle that when you calculate depreciation, you debit profit and loss, you credit provision for depreciation account. Thank you very much. If that has gone in well, let's look at the final stage when you sell the asset or when you dispose it of. That one is a bit, you know, it involves a lot. Let me do this. Let me see. It's unfortunate, but I have to use that example because maybe it will make sense. If somebody dies, let's say somebody is schooling and the person dies, what we do is we remove the person's name from the class register, right? Because the person is no more. So it's like I want to get rid of everything related to the person. So we go to the register, cancel his name. We do it very emotional in Africa. Then if he has exercise books whatsoever, we clear all those things from the classroom, okay, and take them away because the person is no more. It is the same thing for disposal of an asset. If you sell an asset, it means that the asset should go off from the asset account. So look at something here. When you bought the asset, you debited the asset account. So if the asset is dead and is no more, you have to cancel it or you have to remove it from the asset account. So what do you think you have to do? Would you credit or debit? I think there's a rhetorical question. You would have to credit the asset account to remove the earlier debit you did. So the first thing when you dispose an asset is you credit the asset account and the corresponding debit entry goes into an account we call disposal account. Well, let me go through this. I'm sure when we start solving examples, it will make sense. Okay, but we need to appreciate the double entry principle. So when you dispose an asset, the first thing you have to do is to debit disposal, credit the asset. After that, this was an asset you were charging depreciation on it. So if the asset is no more, you also have to clear the depreciation you have been charging from your books. So again, I go back to the second stage. When we were charging depreciation, we were crediting provision for depreciation account. So if the asset is no more, you have to debit the provision for depreciation account. Okay, so debit provision for depreciation account. The corresponding credit goes into the disposal account. So let me try and make some things. If you dispose an asset, an account is opened, right? And that account is disposal account. So the main aim of that account is to ensure that you remove the asset from the asset account, bring it there. You remove all the depreciation you have charged on that asset, bring it there in that disposal account. The rationale is that we want to determine whether that asset has given us some profit or loss. At this point, let me hold on a bit so that you can take some break and process the lots of information that I'm providing. Okay. But I think we'll get it gradually, so you don't have to worry. So let's go back to the first stage. But first of all, let's appreciate that every asset goes through 3 stages. When you buy it, that's when you acquire it. The second is when you are depreciating it. And the third one is when you dispose it or sell it off. So for the first stage, that's when you buy it, you know your normal double entry. You debit the asset and you credit your cash book or the creditor. When you are depreciating the asset, we are saying debit profit and loss account and credit provision for depreciation account. So as part of you trying to always remember it, you can say, oh, okay, when you calculate depreciation, you have to credit provision for depreciation account. When you calculate depreciation, credit provision for depreciation account. The corresponding debit entry goes into profit and loss account. As you always remember this, definitely it will be part of you and you would never forget it. So let me pause and then gradually get you into the disposal of the asset, right? But let me see if I can do something here to help all of us. Well, I think what I'm about to do would manifest itself when we start solving illustration. So let me hold on and not confuse you more. But please, any question up to this point? Any question? If you're okay with the first stage and second stage, I think that is better. That's better. So the next time we can look at the disposal, right? So the first stage is when you buy the asset, debit the asset, and credit your cash book or creditor. And B, when you depreciate the asset, debit profit and loss, credit provision for depreciation account. If you're okay with these two and you can remember them, I'm very happy. When we dispose the asset, we'll get it gradually. Okay, so any question, I would want to pause here and do some reviews before maybe we'll try and delve into much complex things. How much have I confused you? Oh, we are okay up to this point. Well, let's review the lesson today. We began by looking at the reducing balance method. And I want to believe by now, you know that for the reducing balance method, when you are given the rate of depreciation, you multiply it by the net book value. But in the first year, which is the year one, the net book value is equal to the cost. So it also makes sense if you say that in the first year, you multiply it on the cost. Now we just we also saw the sum of years digit method, and we went through determining the sum of years using the formula n outside n plus 1 all divided by 2. Or you can do the normal kg 1 plus 2 plus 3 plus 4 plus 5 to get your sum of years. And then regarding the remaining life, arrange the years, and then the remaining life will be the descending order of the years. Okay. So if it is year 1, 2, 3, 4, 5, you just reshuffle it into 5, 4, 3, 2, 1 in that order, and you can get your remaining life at any point in time. Then we just landed on a very confusing land. That's when you buy the asset, when you depreciate it, and finally when you dispose it off. Okay, so let me allow my students to settle in the information they have gotten today. I think God willing, next week when we meet, things will become more clearer as we speak on illustrations and so. But my main purpose for this lesson is for you to appreciate the reducing balance method as well. So I want to believe all of us are very okay with that. So there's Mr. Amwa. Any question, any contribution? Maybe you want me to modify how I take you through the lesson. Maybe I'm too fast, maybe I'm too slow. Please, I'm welcoming all those feedback to help me improve and provide you with the best. So it could be a question, a suggestion, an addition or subtraction or anything. Or maybe you want to see my face, so you want me to share my video, you can tell me, I'll share it. But maybe you pay me some small allowance. Okay, so any comments from any of you? Amma, Ella, Kenton, Mameya, and Bene or Oforiwa. Any comment?